Hiya, Kathy. Welcome back to F.A.C.E.
Good morning, Dale. Thank you for having me. How have you? Happy New Year.
Happy New Year and different market conditions since you and I have been talking. We were in bull trends, and over the last, I don't know, it seems like it was a long time. It's only been 60 days. Things have changed, and I'm wondering with what you do, and you remember how to share your screen, Kathy?
I do.
Okay.
Yes, sir.
That there probably are there many new listings in this environment that you're paying attention to, or are there older ones that have been pressured that look like attractive entries here?
Yeah, well, let's get into it.
All right.
I remember last year at the New Year when we talked, I was in this waiting game, and I remember telling you I was
Yeah.
optimistic maybe 6 months from now, from last year in January. And
Yeah.
then when we met again, I saw some good prospects, and I was excited. I was sharing that with you. And now, all those prospects are down in the dumps.
Yeah. 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 So
So,
even though the averages don't reflect it, I'm sure there's some things you're following that are down 50%. That
right. And I'm
Yeah.
going to show some of those statistics today. Really quick, I wanted to show some of the top IPOs of 2021. And this is the third column is the percent gain from their day one closing price as of March 4th, so just last week. I mean, Zim, obviously, transportation stocks been doing well at 646%. But I mean, if you look at all these other percentages, I mean, the next highest is 60 all the way down to 8. And the really shocking thing here is that no other IPOs from 2021 have posted gains from their day one closing price and trade more than $20 million a day. We've talked about that liquidity
Yeah.
requirement. So there is
Right.
not a lot of good stuff out there right now. But that's
Okay.
no surprise to anyone, right?
Okay. So I don't know if I ever asked you this before, but can you take short positions?
Well,
Or
sure.
is, I mean, I'm just saying that, you know what to look for that makes something a very good candidate for a long-term buy. Do you have anything, system that would tell you that you could be short this thing for a while and just flip it?
So unfortunately, I am just a long equity trader.
Okay,
I've
that's
never.
what I thought. Yeah,
Yeah, I'm not, I've always, I've told you this many times, I learned from William O'Neill, and I guess
right.
I don't want to miss when things turn around. And I don't, so, and I like, I'm not saying I'm taking a break because I'm sure still screening every week, of course, but there is a little less work in this time where
Okay.
everything down and you're just looking for the one or two that are popping up versus when everything's popping up, and then you really got to pay attention to what's going to be the next one that's going to move first. Does that make sense?
Yeah, and some of these markets are definitely correction territory. I mean, there's some that are in bear markets. So, and I also know some very smart guys that think that we're setting up for a rally to new highs. So, what's your next slide, or what things are you monitoring in case the market does get its footing? Even though we're in this war that I don't know if there's gonna be anyone suing for peace, and this ends. And how about things that have taken advantage of sharply higher commodity prices? I would think, when things get fashionable, Kathy, all of a sudden there are companies that are associated with groups that are in bull markets that are getting the headlines. Anything, say, for example, in the mining space or in the oil space, as far as IPOs, that think that there'd be a good time to launch an IPO with, the tailwind.
Yeah, well, you know IPOs, want to come out in strong markets, right? So that's why, you know, in 2020, we had a lot of strong IPOs. In 2021, we had a lot of IPOs too, right? Because it was building off of 2020, but it just didn't work out. So an IPO has to have really great fundamentals, really great sales to come out in a really bad market.
Okay. Yeah.
Otherwise, you know, they don't have any momentum to keep them going. And as you know, most IPOs don't necessarily have earnings when they first come out. Maybe they have
Right.
sales, but some don't even have sales. So it's really hard for an IPO to be successful in a market that we're seeing right now. And what I wanted to share here, I'll just jump to this slide here. I mean, of the 427 IPOs, and this was we got this data from MarketSmith, only 48 of them, right? So 11% are, again, trading above their day one. So they're all below where they first came out. And then, you know, how far below that? Well, 42% of them are 50% or more below their day one closing price. So, I mean, these are just all, you could say, I mean, some of them did have successful
Launches.
initial IPO advanced phases
Yeah.
before the market turned. They did well in the short term, but they're all way below 50%. And then here from their peak prices, if they even did
Yeah.
have a run up, you see here almost 50% of them are 50% below that peak price, and 28% of them are 75% below that peak price.
All right. So what do you do with those issues? Do you wait for a trend to change and start getting some trend reversals? Okay, there you answered my
Absolutely.
question.
I am looking for a trend change. And most
Okay.
importantly, in the NASDAQ and the S&P. And
Okay.
you know, you mentioned the mining stocks, you mentioned oil and gas. I mean, they've definitely had some good setups. And if that's your thing, you know, there have been things to buy to make some money in. But you know,
Right.
if you're focusing on IPOs like I am, you know, I'm not necessarily going for those oil and gas because I'm waiting for those setups, and there just hasn't been any.
Okay.
But when I talk about trend change, I just want to share, you know, I mean, I'm looking for the 10-day, just simply the 10-day, you know, to be trending up again, the 21 EMA. And right now the indices are way below that. As you know, yesterday
Yeah.
we almost cut, we might undercut it today. I don't know what's going to happen. But what I'm doing and this is probably an every other day, definitely weekly, just because everything's so down in the dumps. I'm screening IPOs from 2019 to 2022. And again, $20 million a day or more traded. And only 41 are over 100. I wanted to highlight that. So, I mean, the liquidity, the quality, and I base the quality on liquidity, right? So how
Right.
many dollars traded? Only 41 as of yesterday were over $100 million a day. Most are still trending down, and they're well below that 40-week moving average. So I'm looking for character change, you know, new, organized, constructive consolidations. You know, when I
Okay.
look at a chart and all I see is a downward sloping line, I don't get excited.
Okay. So what do you mean by new organized? That some of these IPOs may be absorbed, or that they may go ahead and bring something, purchase something and change the character of the IPO?
Yeah, exactly. And so I thought a good example would be Etsy.
Yeah.
Etsy was one that you know, we thought was going to be a complete you know, disappointment, never come out. It was, we call this a pump and dump, where it just goes
Right.
straight down. And that's what a lot of these IPOs look like right now. I mean, Coinbase looks like this.
Okay.
Robinhood looks like this, you know. And so at some point, hopefully it kind of bottoms. Again, we call this that institutional due diligence phase. And, you know, people could, you know, maybe be trying it as it's coming back up. But here's that first little indicator. This is a gap up on earnings. And then here it, you know, created a base, but still a long one, right? I mean, there's going to be a lot of overhead resistance, as this, you know, I'm pointing out here with this turbulence zone. But I'm going to be looking for a constructive base. This is a large one, but that's okay. You want to see things like that. And this could be like, you know, a first entry that I'm going to be looking for, and see how it tightens up, and then it starts its run and eventually gets past that turbulence zone and still runs a little bit more. So this is what I'm looking for, Dave. I'm looking at these downward trends and I'm waiting for them to start to go sideways. Hopefully look for a pop and then start looking for those first stage bases.
Okay, so you're going to trade these, well, like Etsy. How about IPOs that did something like Etsy did, but you get a big pullback in Etsy? That could be a break to buy. So it no longer qualifies as an IPO.
Oh, okay. So you mean like maybe Zoom or something like that?
Yeah. So some of these stocks that have really pulled back. You may have had great trades going before things turned, and now they pull back to IPO levels or during where the market was during prior in the due diligence phase. Are those candidates for you, or
You
they're not
know,
IPOs anymore, so they don't qualify?
it's a great question. And IPOs can be strong for, maybe even up to 8 years, right? I mean, I think Bill O'Neill used to say 6 to 8 years, new companies, those are the ones you want to look for. And here I even have some annotations. This is MarketSmith. I was waiting for Zoom to possibly trend change here. You see, I was drawing, maybe it was going to be a double bottom. It kept going, of course, but for sure, I feel like it is possible. Definitely. I mean, we've seen it where we've had stocks with great runs and then they have to consolidate and almost in a way create another due diligence phase. Okay, it's had its great run. Its earnings aren't as good. Can it reinvent itself and come back? Those gains that digested and then they totally come back. So that's why I'm still screening from 2019 even to 2022, because again, some of these, this is IPOs. Zoom specifically was one that came out in 2019. So I'll definitely be looking for that as well. But as you can see right now, it's still on a downward trajectory as well.
Okay. Well, I know none have qualified for you to be compelled to buy them. Do you have a few issues that are on your monitors that you think could be something that could qualify when the trend changes?
Yeah, definitely. So the one I was thinking about sharing was Docs. You see, I have some alerts here that I had created. It had a really good earnings pop. I mentioned that before. Earnings usually is a good earnings. A pop can be a change in character. And it was very tight there for a while. I was monitoring, the high level closes and the volume associated with it on that earnings. But it's kind of fallen back in. But this one I gotta say is at the top of my watch list. We'll see if it holds. Other ones have not been this strong.
Would closing back
this
over
is the only one that's at the top of my list, though, I have to say.
So there's so few candidates. If we started trading above that prior to highs at 60, a little over 60, looks like you have a little red line there, or else I have to clean my screen. Right up
this
there.
Is the 20. This is the 21. Oh, no, it's just the 30 simple moving average. This is a weekly chart.
Would that be a go for you?
Yeah. So what I would be monitoring is specifically, this is the earnings week gap bar. So I'll be monitoring where it closed on that week. And then of course the high, and this is when I'm going to be watching it to see, what it does. And, it still hasn't even actually, well, maybe it did undercut it a little bit, but I'm going to be watching to see if it can stay in this range and even tighten up some more. I like that it still has some good accumulation here.
It's still way above its IPO price.
Yeah,
and
it's still above its IPO
actually.
price.
Yeah.
And this is a level you could check too. I mean, the weekly close of the first week, 55.98. So that could be a level to watch. But you see, and we've talked about this, this is where that's where it's going to struggle. So yeah, it's got to get past here, maybe tighten up again. And then of course the turbulent zone will be another area. But if it tightens up below that, I'll definitely be looking to potentially add if the RS stays strong, and of course is one of the ones that actually is going sideways or up.
Well, maybe this is a good time for people to prepare, since there aren't many and they're out of favor, to be a contrarian. Maybe it's time when people are turning very bearish in the equity market. I mean, you haven't seen this kind of pessimism in a long time, for people to pick up your book and look for straw hats in the winter.
Exactly. This is
So,
a great time because,
okay.
you have this bottoming, and this is what a lot of them look like. But they're going to start popping up, either earnings or some kind of news or whatever. And then the ones that can pop up and then go sideways and create a nice little base of some sort, that can be a potential first entry. And then that, in conjunction with maybe the NASDAQ trend is changing, then uh, you've got more things in your pocket that say, okay, this is potentially going to turn around.
Okay. Let me ask you this. So we've had markets break, and we could have very sharp bear market rallies. In fact, perhaps one is developing right here from yesterday's lows, and the S&Ps could rally back to 45, 4,600. Most people don't think that could happen, but you're not going to get a follow through to new highs and exceed new highs. Is that still the environment where it's not as much of a long-term hold, but maybe you lower your expectations on what can happen and your holding period if we're in, say, a two-sided market, which we
Yeah.
weren't for a long time?
Yeah, absolutely. I mean, you have to give what the market, you have to take what the market gives you. So if if not all the arrows are pointed in the right direction, and you like to trade, and you can get the little pops here, 5%, 10, 20%, whatever it gives you, and take it, for sure. I'm
Yeah.
with you.
Yeah, like this example, Kathy, maybe it doesn't have new highs over 100, but it could rally to 80. Is that something you would look to participate and be a little, maybe tighten things up and be a little quicker to take profits in this environment?
I mean, Dale, I was definitely, I have the alerts here. I was definitely
Yeah,
trying this here, but then I got shut out because
right.
it didn't hold. And actually,
Yeah,
I just thought of another one. This is Victoria's Secret. I mean, it looks horrible now. But it actually looked like it was constructive here,
yeah.
even popped up a little bit. And so this was another one that I was trying. I mean, I don't really necessarily know what's new about Victoria's Secret. They've been around a long time, but I was looking for something, right?
There are sanctions on lingerie now.
Yeah, there you go.
All
And
right.
but then it didn't work. So here we go. We've got it undercut the whole structure. I mean, this is typical. So I mean, I gave it a shot. It didn't work. But
Okay.
this one and Doximity are the only ones I've really tried to do in the last couple of weeks, and just had to cut my losses.
Okay. Why don't you show your website, Kathy, so people know where to find you and follow and learn from you? So,
Yeah, thanks,
if you can
Dale.
do
Well,
that,
me and my
go ahead.
co-authors and the interviews we've done are all on
Yeah,
our website. I can't seem to figure out how to bring it back up to the
that's
full
fine.
screen. But anyway, thelifecycle.com. I'm also on Twitter, and I'm on LinkedIn. And if people have questions, I can do my best to answer them through one of those avenues. And I really appreciate you having me on. It was really interesting to prepare this for you, because I had no idea, because I hadn't really run the numbers, how few 2021 IPOs there were this year. It's just crazy that were successful. Excuse me, that were
Okay.
successful.
All right. Well, a lot of things I see on my screen are like, Doug Casey, Crisis Investing from the 70s. You have the patience, and sometimes you just have to be a spectator instead of a speculator. And you have the wisdom to know that. And I appreciate you coming in and saying there's not much to do, because a lot of people will, even if there isn't much to do, will say there's a lot to do. So
Right. You always
that's
have to be ready, right, Dale? You
yeah,
have to be
yeah,
ready, because it can change in a snap of the fingers.
It can.
So maybe your research doesn't take that long, but you still got to do that research because you don't know when that one's going to pop up.
Don Henley, in a New York minute, everything can change.
There you go.
All right. So thank you so much, Kathy, for being here. Everyone, you could follow Kathy on Twitter. There's her handle at KGD_investor. I recommend you go to her website and check out the book because bear markets, just like bull markets, don't last forever. And perhaps when we have another turn back to the upside, you'll be prepared to diversify away from, just spec stuff like currency trading and gold trading and S&P trading, and put something away in your 401k or pension that could work for you for a long time. So I appreciate your sharing your knowledge with us again, Kathy.
Dale,
And,
I appreciate it.
And also hope that action picks up for you, and that
Yeah,
some
definitely.
great
For all of us.
and great trades ahead for you, Kathy.
Thank you.
Always rooting for you. Kathy Donnelly, everybody, co-author of The Life Cycle Trade. You can find her there at thelifecycletrade.com. Follow her at KGD_investor. Thank you, my trading warrior sister. Nice to talk to you.
You as well. Thank you.
Okay, that's a wrap, everybody. You could join the team in 20 minutes on the Morning Edge. Good hunting, and remember, don't just count your pips, count your blessings. See everyone tomorrow. I have a gold bull that has finally seen its heyday. James Henry Anderson will be with us tomorrow. Adios, everyone. Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.